Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 13th of March 2016, and we're providing a brief summary as to what negative interest rates actually means. Now, before we go into the merits and demerits of negative rates, let's just take a look at who is adopting such a policy. Well, a year and a half ago, the ECB, European Central Bank, introduced negative rates, and on the 10th of March this year lowered them further, charging banks 0.4% to hold their money overnight. In January, the Bank of Japan adopted negative interest rates. Sweden, Denmark, and Switzerland have deposit rates below 0 too. And even the US Fed Chair Janet Yellen has said that should there be a change in economic conditions, negative rates could be put on the table. To show the magnitude of this policy, by February 2016, more than $7 trillion of government bonds worldwide offered yields below 0, meaning that investors will actually get back less than that which they invested. So what is the purpose of introducing negative rates? Well, in theory, interest rates below 0 should reduce borrowing costs for companies and households, driving demand for loans. Also, it puts off people from saving money, and therefore, as they choose to spend it, the result is increasing economic activity. And voila, economic growth increases. In practice, however, there is a risk that the policy might do more harm than good. If banks make more customers pay to hold their money, cash may go under the mattress instead, removing from lenders a crucial source of funding. So, as in many cases, these negative rates have not been passed on to depositors, as the banks have chosen to absorb the cost of the negative rates themselves. This squeezes their profit margins, the difference between their lending and deposit rates, and might make them even less willing to lend in the first place. For some, negative interest rates are seen as an act of desperation, a signal that traditional policy options have proved ineffective, and new limits need to be explored. Rates below 0 have never been used before in an economy as large as the euro area. While it's still too early to tell if they will work, ECB President Mario Draghi said in January 2016 that there are no limits on what he will do to meet his mandate, and he used similar words again recently. Interestingly, the Bank for International Settlements warned in a March 2016 report of great uncertainty if rates stay negative for a prolonged period. And if more and more central banks use negative rates as a stimulus tool, there's concern the policy might ultimately lead to a currency war of competitive devaluations. Will this negative interest rate policy work? It's doubtful. At best, it may prevent increasing deflation. However, with average wages rising at or around 1%, and those with savings worried about the future job market, we simply cannot see how this sudden increasing spending is going to occur. It's a worrying time for everyone, and an experiment is being carried out which could in time have even more harmful consequences. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.